So welcome to this afternoon's webinar. For those who don't know me, my name is Sarah Corley. I'm the Community Manager for DFI, and it's my pleasure to be organising the DFI's webinar programme. And it's great for us to partner with our local-based partners, Senfree, and we're both Cape Town-based, so it's nice to be able to work with a local partner in putting together a webinar tackling this topic that really is impacting all of us at the moment, COVID-19 and the impact it's having on not just the population as a whole, but in particular relating to the financial sector. Today's session will feature some special guest panelists who are going to be introduced to you shortly. But the last thing I want to do before handing over to our moderators today is to remind you all to please pop your questions in the Q&A function. We'll be making sure we come around to asking those at the end of the presentations from the speakers. So do make sure you pop your questions in there to help us find them and ask them at the end of the session. Also, just a quick reminder, we're recording today. We'll be sharing the recording tomorrow. So if you found today's session really interesting, we'd be grateful if you share the recording with your network and people who may be interested. So I'm going to stop now and hand over to our moderator for today. I'm going to hand you over to Jeremy Gray from Senfree, who's going to tell you a little bit more about what we're going to cover. So over to you, Jeremy.
Great. Thank you very much, Sarah. Thank you everyone for joining. I'm really excited to introduce the panel today. We have a really great panel. We have Craig Thorburn from the World Bank, Elias Omondi from IRA Kenya, and Praveen Kapalje from Holland International. So, and I think if I'm not mistaken, this is the third one in our series together with DFI that looks at the impact of COVID-19 on the financial sector. But today we want to focus in on the impact on the insurance sector. And in particular, the theme that we wanted to pick out was on the impact on digitization within the insurance sector. So I'm going to start with just setting the scene a little bit, but then I'll keep it short because I really want to make sure we spend as much time with the great panel that we have today. The question that I have is what is the impact of COVID-19 going to be on insurance? And can it really shift the digitization of the insurance value chain in sub-Saharan Africa, particularly over the longer term? Definitely in the interim period with social distancing being implemented across sub-Saharan Africa. You can see that virtually every single country across sub-Saharan Africa has implemented measures against COVID-19, with many being quite strict in what's been implemented. And that has had, obviously the primary impact is on entire societies, but that has implications for insurance and how insurance operates as well. And it has really led to a question for insurers in terms of how can they digitize the functions of the insurance, of the value chain, including some of the traditional things like sales. And we've seen some really interesting and innovative responses, particularly in the health space. A number of insurers have started to develop tailored insurance products with a COVID-19 angle. I really like the example of Discovery in South Africa, where up until prior to COVID, we weren't permitted to have remote health consultations. But since the lockdown has been implemented in South Africa, Discovery have gone full steam ahead with their digital health consultations, and I think that's a real innovation that we'll see continue to exist even once we have gone beyond the current crisis. But there's also implications for regulators. So how do regulators respond in this period? Regulators are also dealing with practical considerations of how they supervise remotely. There's a need to clearly communicate updates to industry. But there's also innovative things that they're doing to make sure that they encourage innovation and encourage a shift towards digital channels where possible. I think we've seen in a number of countries now that there's been a waiving of fees on mobile money payments, for example, in a step to try and reduce the reliance on cash to both facilitate remote services, but also to reduce actual interaction with cash, which in itself becomes a health risk. And I think what's really interesting is that in the insurance industry, as much as this crisis does offer or does throw up a number of risks for the insurance industry, it also offers significant opportunities. If we look at past disasters that have taken place across different countries, the rapid, we see really quite substantial positive impacts for the sale of insurance when insurers have acted appropriately through that crisis. And that's an important caveat. But the saliency bias and availability bias. So saliency bias refers to, these are referred from behavioral science, and saliency bias refers to the focus on issues or information that is particularly prominent to someone. So an increased focus on issues that are prominent in that time. And availability bias refers to an overestimation of the likelihood of events based on recent or emotionally charged events for an individual. So the point is that in a crisis situation, people are entirely focused on how to cope with a major risk, in this case, a pandemic or similar to a pandemic. And that means that a significant portion of their mind space is focused on what coping mechanisms are available to them. And insurance is clearly a prominent one. So we often see an increase in insurance sales after a major disaster or event like this. And I think we already see similar examples happening in the health and life space as a result of COVID. A really good example that I like is Pioneer in the Philippines, who covered a number of, they were one of the, say, not in Philippines prior to Typhoon Haiyan, but after the typhoon, they continued to pay out claims consistently and saw a rapid and ongoing increase in their market share. And today they are the market leader in that market. And we've seen, in 1971, there was the San Fernando earthquake, which insurance increased from 5% to 22% 5 years or 6 years later. In Zambia, something similar with index insurance. When Mayfair launched their insurance product in Zambia, index insurance product, they initially were only able to sign up 3,000 or 4,000 farmers. Following droughts and their continued payment of claims through that period, the number of farmers that purchased the product grew exponentially over the next couple of years to reach 60 to 70,000 farmers just a couple of years later. But how do we actually do that? Because traditional sales in Africa are typically made through agent and broker sales, basically primarily through in-person sales processes. So what are the opportunities to actually physically sell? Like, if people are willing to buy insurance at this time, can insurers actually reach them and sell those products? And I think on this slide, we can see that there's been significant increases in the growth of digital channels and the ability to reach people across the continent. A significantly higher portion of people now have mobile subscriptions, access to internet than even 5 years ago. But there are still major infrastructural challenges. And there are additional challenges as well. I mean, we know traditionally that insurance is sold and not bought. It's not an easy sell. Even if people are more open to the idea of having insurance at this time, is it feasible to actually sell through more passive channels like digital or internet sales, for example? The other challenge is that cash is still predominates throughout the continent. Even in countries that have more established digital payments networks, the majority of payments remain in cash. And it's not that easy to actually shift people's behavior to that extent. And if the infrastructure is not in place, then it's simply not possible. There's a real lack of digital skills and literacy across many populations, which means that a transition to digital sales and also other processes in the value chain, like digital claims, may be challenging, and people struggle to interact with digital services, even if they have access to them. And then there are some regulatory restrictions. So many jurisdictions still restrict electronic signatures, and electronic contracting are still not permitted. Sometimes KYC requires in-person or physical documents rather than digital KYC. So these are the types of things that regulators consider in terms of being able to enable this type of digitization. So I'm going to stop there because that's just a brief summary introduction to the discussion we want to have today. And so let me start by introducing my panel. We have Praveen, who is the CEO of Hollard International, and he's worked across, a number that Hollard currently work in. I'm excited for him to test the view of how insurers are starting to see and the opportunities and the challenges emerging from COVID-19. We have Elias Omondi, who's an associate actuary at the IRA in Kenya. So he really will represent the view of insurance regulators and how they're thinking about these challenges and responding to them in the sub-Saharan African context. And last, we have Craig Thorburn, who is the lead insurance specialist at the World Bank. And Craig has worked across, I think, nearly every country in the world, Craig, at some point, in advising both regulators and has done work with providers as well, in terms of how to both extend the reach of insurance and has done a lot of work with the International Association of Insurance Supervisors as well. So I think we've got a really excellent panel to talk to this topic now. And I'm going to stop sharing. And with that, I want to move on to starting with Elias. So I think the first topic I'd like to speak to is really around what are the practicalities of working remotely. So with social distancing, it does mean that both insurers and regulators have had to work remotely. And that does have a lot of practical implications, particularly in the African context. So Elias, how have you and the IRA found the experience of conducting supervisory activities remotely? What have been the major challenges and what have you prioritized?
Right. Thanks for the invitation and basically giving us an opportunity to share our insights in this. I think basically we are experiencing a very, I would say, interesting moments in the world, particularly when you are coming from a regulatory side. And ideally, what when you're working from or you're working for a regulator, you really want to have a lot of discussions. You want to have face-to-face meetings. You want to have that particular oversight that gives you some form of presence. And ideally, when you look at COVID-19, it has basically interrupted the way regulatory bodies have been conducting themselves. And ideally, from what we have seen in the last couple of months is that we had to come up with quick ways of implementing protective measures that will ensure that the staff and also the customers, essentially external clients, this means the staff of the regulated entities, the customers that do want to raise complaints from our office are protected and also adhering to the government directives that have been set. So this really brought in a number of activities that we had to ideally ensure that are done remotely. And from a supervisory perspective, we have a number of functions that we have to adhere to. We have to ensure that the market is stable. That means that we have to ensure that the companies still manage the companies through prudentially and governance is of high level. We also need to ensure that consumers are protected. Over and above that, we have a mandate of developing the market. Now, given those particular elements, we really needed to adapt really fast in terms of ensuring that we still manage our functions and our supervisory oversight within this environment that is highly managed and controlled through a number of government directives. So as an authority, we have an electronic regulatory system. Now, this system, we quickly had to come up with measures in which the system can be accessed by our staff remotely. So we had to set up VPN connections because companies used to provide the information online. They used to essentially all the formal applications and communications were managed to that particular system. But when you come to where we were as an authority, we used to still or go to the office and access the other component of the system, which is what we usually call the supervisory center. So we had to ensure that this particular platform can be accessed by our staff from their homes who are working from home. Ideally, we have close to 80%, above 80% of the staff working at home. That you basically have close to 80 people working from home less than 20 people are still working from the office. So we had to ensure that these particular people could access this particular system. They could work and ideally still meet the obligations of customers, the companies, and ensure that we still ensure there is some form of financial soundness. So we had to also face a number of challenges, and these basically came from the staff themselves in terms of the work schedules. They had to basically review that, because it would basically bring confusion between working from home and flex working. So ideally, we had to clarify and meet what we and basically discuss with what we really expected from them, because it kind of meant that we had to look at different work schedules. We had to have a way of communicating and ensuring there's accountability in terms of what each and every person is doing. So we had to also implement a couple of systems that will enable us get staff into properly knowing their work schedules and what they need to do, and basically reporting that in terms of getting some form of accountability. So a number of challenges was from the management perspective of humans in terms of what do they really need to do. You also would meet a challenge of someone basically not stopping to work. I think that would ideally fit in that, because you don't know when to stop. When you're in the office, you can know, okay, fine, we work from this point in time to this. So again, wellness and all that needed to be really looked at to ensure that someone doesn't go up to a point that he doesn't know when to stop. So ideally, it has been challenges around humans and how then they take this going forward. And we haven't really faced a lot of challenges on the technology side, and it was highly supported by the government requiring to have cyber hygiene, whereby we had to get a couple of guidelines from the Ministry of ICT and Innovation, really looking at how then working from home and what are the principles that each and every officer should adhere to in terms of accessing this system. So it was an entire process in terms of dealing with that. Now, the biggest, in terms of the activities that we did prioritize on off-site analysis, because this is one of the quick wins based on the system that we do currently have. Companies do submit data online that can be processed through the application that we have in place. And what we are currently working on is essentially going virtual on on-site inspections. In fact, interesting, today we conducted a test on the first virtual on-site inspection, whereby we are looking into ways in which we can still be able to augment off-site analysis to on-site inspections, because one of the things that we have to recognize is some of the risks that we do look into when it comes to off-site cannot be, some of the risks cannot be identified unless you kind of augment that to on-site. So we are looking into ways of using a number of applications. We've identified applications that will enable us conduct on-site inspection at a scale as we maintain social distancing and remote connections to these particular companies. So it's a process. It's something that we've said as an authority that we have to adopt or adapt to COVID-19 instead of looking at post-COVID-19, and see which are the learnings that we will also see and continue to perform as time goes by. Thank you, Jeremy. I think I'll over that.
Yeah. Thank you very much, Elias. I think that's really interesting. I think virtual on-site inspection is a real innovation, and I think possibly something that could even continue to exist, assuming that the current crisis is we do move beyond the current crisis. Okay, so moving on to you, Craig. I think you've worked with regulators from across the world and advising them on regulatory and supervisory processes, but I guess never in a crisis quite like this one. From a broader global perspective, what have you seen as the primary responses to the crisis by insurance regulators? And what would you advise regulators particularly in sub-Saharan Africa, to prioritize during this period?
Well, yes, thanks, Jeremy, and good morning, good afternoon to everyone. I think I can elaborate a little on some of the really good examples that we've had from Kenya already. Really, I think I'd summarize what supervisors are doing in three main areas. The first one really is being proactive and focusing on supervision that matters. And that's really just a matter of checking with the entities that their business continuity plans are actually working effectively, checking on what's happening as the COVID numbers develop and what the individual insurers are actually seeing in terms of activity. Also, perhaps looking at updating stress testing that might have been done. There's been a lot of stress testing done on, say, economic volatility and also on claims impacts, but never the two together in a lot of ways. So revisiting that is something that people are doing. And then turning to the market conduct issues, they are also mentioned. So really that, emphasizing the need to treat customers fairly in the changed circumstances, how that works when insurers are more remote than they might be normally, and also how that works with terms and conditions of policies, changes to business volumes that could be expected, things like that. Then also the other thing supervisors have been doing is doing less of some things. They have been deferring other policy development initiatives that aren't so critical right now, and in some cases being a little bit flexible about how reporting timetables are done, reflecting the fact that maybe getting auditors to sign things or procedures having to be transitioned in the insurance companies. It's difficult perhaps if there's a regular reporting date as part of that process. In some cases, they've either announced a sort of blanket flexibility, or they've indicated that companies should get in touch if they've got an issue. And then the second thing, not so much related to the supervised entities, is actually to the supervisor. And again, we heard some good examples from Kenya, just exactly how the supervisor works when they're also transitioning out of the office into a home-based work. They've been contacting the entities saying, this is how you can keep in touch with us. These are our mechanisms for doing that now. And also things like this on-site inspection virtually. We're seeing a bit more of that. And I think it's a very interesting approach to, first of all, hold some more meetings virtually and also gather documents and things like that, so that the on-site inspection focuses more on making the interaction with the insurer, just covering the critical issues rather than sort of hanging around the office for the sake of it, because you can't do that. And then the third area is, I would say, some proactive things. And these are really, where they need to be some changes in policy to cope with and facilitate COVID in a positive way. Handling documents, digital signatures, things like that. Both for the regulatory returns and also for the interaction with the customer is a good example. And then another one, which perhaps we'll hear more from Pravin about, is things like facilitating COVID actions by customers, making sure that insurance policies are not actually a barrier to the customers getting access to either testing or medical services or something like that. So some of them are actually adjusting terms and conditions of contracts to facilitate that, or particularly, as you mentioned, to make sure that, where possible, things like telemedicine can work. And I think these are, important things for right now, but they could also be important in the longer term. We're expecting some more changes down the pike. We sort of see that there's a short-term and a longer-term process here. But I'll just stop there and we can come back to the longer term a bit later, I think, Jeremy.
Great. Thanks, Craig. I think that's some really good points. And I think with that, let's shift to PK. So PK, from the insurer's perspective, how have you, I mean, I think we can definitely see some opportunities. And if I'm not mistaken, Hollard's definitely been thinking quite deliberately about how to take advantage of the opportunities. But let's maybe start with, what are the major challenges that you've seen from working remotely? And in particular, what parts of the business and the value chain have been worst affected for you?
Thanks, Jeremy. It's great to be part of this webinar and to share some thoughts with the participants based on some of the experience that we've had over the last 5 weeks. It's obviously an unprecedented situation in our lifetime. So it's been a very interesting and challenging time. I think in many ways, I think we're a very unique industry. So I think in some ways, much of our value chain can actually take place remotely. However, other elements of the value chain definitely struggle. So if we look at it operationally, I think the good news is that operationally, we've made a relatively smooth transition to working from home. And I think we've really been lucky. And I think it's to some of the points that Elias raised earlier, if we look at the technology aspect, I think a lot of our teams have made that transition very smoothly, assisted by the fact that we've been on things like Microsoft 365 and Teams before. Lots of our line of business systems are actually in the cloud. So because of that, transitioning to home, working from home, is really driven by whether you've got good internet connectivity or not. So I think on that side, we've been fortunate and things have worked reasonably well. If we look at the insurance value chain, I think there are some areas that lend themselves to working from home, and the other areas which I think, as you pointed out at the start, are much more challenging. So if we look at product development and pricing, we joke that since our actuaries are generally quite introverted, they actually might prefer working from home, but that area has been relatively smooth. If you talk about marketing, I think we've made a good transition to, given the take-up of social media, driven world, and how people consume social media across income segments actually, and across life versus general. It's been relatively smooth in terms of us being able to still get our messages out, whether it's product-related messages or consumer awareness-related messages to our consumers through digital channels. And I think even from a broker engagement point of view, while the face-to-face is important, we've found that we've been able to manage that relatively well. However, I think as you've pointed out, everything is not smooth sailing, right? Particularly if you talk about sales, particularly on the life side of the business, I think in general, consumers have been very much more accustomed to a face-to-face type of selling. And even on the general insurance side of the business, where you're talking about large commercial and corporate risks, they do really want to engage on a face-to-face basis. So that definitely has been a challenge. From a claims point of view, policy fulfillment and claims point of view, we've definitely had to make adjustments because usually policy fulfillment is done on paper in a lot of situations, and people like to touch and feel that. So there's been a challenge. And then from a claims point of view, where a part of the engagement might be telephonic, there are other parts of the value chain, like the whole panel beta side of it or the whole assessment side of it, which actually is a physical interaction, and as a result has been challenging. So if you look at customer engagement, policy servicing, some challenges, but people are generally comfortable talking to you on the phone. So I think if I go into some of these areas in a little more detail, right? So if we talk about sales, that's probably the biggest challenge. And I think the challenge is also related to the fact that it's not just face-to-face that has been shut down at this particular time. Even call center-based sales, because of social distancing and so on and so forth, have also been restricted. So being able to engage with customers in a call center environment has also been challenged. So I think there's significant work that we need to do to be able to deal with that challenge. If we talk about risk assessment, I think previously, particularly on large corporate and commercial risks, we would have risk surveyors going out to sites. That's a significant issue now because we can't get people out to sites. So again, we've had to start thinking more creatively about how we establish the actual risk that we are getting ourselves into. Particularly where we deal on the policy servicing side, where we deal with the mass market, customers are very comfortable going into branches and having a face-to-face interaction for even some of the activities that they would normally be able to do on the phone. So that again is something that is a challenge. And keeping our staff motivated throughout this this period where they are distributed in their homes as opposed to being in one room has proved to be a challenge, particularly on the what we call the production kind of environments, whether it is sales, claims, and policy servicing. So those are some of the challenges. And maybe the last one that I wanted to touch on was the whole point around cybersecurity, right? We've made transitions to working from home very rapidly, and we've tried to ensure that we have ticked all the boxes in terms of cybersecurity. But I think we are going to have to put a lot more investment into that to ensure that we are completely safe.
Great, thank you, PK. That's a really good breakdown. I think cybersecurity is definitely something that suddenly more and more firms are being forced to really think more deliberately through. But I also really like your point around the need for behavioral change, both with consumers and with staff, and how you incentivize certain types of behavior in a very different environment. So I want to come back to that in a bit, but just briefly from the Q&A, Elias, a question maybe for you. In this period of rapid changes and rapid responses from the regulator and putting in place certain provisions like grace periods and so extending grace periods and so forth, which I think is the case. Jerry Jomo has a question asking, how do you deal with industry consultations? Given that you're trying to pass things really quickly and industry is not as easy to consult with, how are you engaging with that as a regulator?
Yeah, thank you. Basically, what we've been doing is trying to get hold of what we call a COVID-19 response team that has been established within the regulator. And the work that these particular persons do is basically to get and respond to COVID-19 related issues. Now, what we've been doing over the last couple of weeks since this particular pandemic started is to engage the industry as frequently as possible in terms of how then do we become supportive of the entire ecosystem. What we preview is that this pandemic ideally affects the entire ecosystem. It has an impact on the consumers of insurance products. It has an impact on the insurance companies. It has an impact of even the intermediation process, the intermediaries within the entire value chain. So we've been coming up with what we call different responses at different levels. So the first response that we did was to look at how then do we ensure that there's companies are allowed to, in case there were some returns that they were supposed to provide, we provided those particular extensions just to ensure that in case there was inability to do, to basically submit those particular documents, they were given time. The next response was in terms of how then do we ensure that customers are comfortable given this particular pandemic. So there are three areas that we wanted to address. The first area was in terms of consumer protection. How do they perceive and how this COVID will impact on them? The second thing was in terms of ensuring that they don't get to a point whereby their policies are lapsed. So we looked at ways on which the grace period could be extended. And what this particular clause means is that if a customer engages and talks to an insurance company, indicates some difficulties in terms of paying their premiums, they can provide a particular extension. So it was not whereby this applies to the entire industries, whereby companies were supposed to discuss and engage with their clients in case there was some inability of difficulties of meeting some of that. Now, the other component that we would see it was about ensuring that they provide some clarity to some of the policy coverage, because customers would ask a number of questions surrounding COVID-19 and a number of products that they were having. It was quite important them to engage their customers in terms of providing some clarity to some of their policies, policy coverage that they had indicated. Now, over and above just looking at the customer side, we looked into business resilience in terms of succession planning in case someone within the organization, either the CEO, the board chair, the key control functions, what would basically impact a company if these particular persons were either infected by this particular pandemic? What would basically happen to this institution? So it was clearly important to look at how then do we have a succession planning within the BCP, the business continuity processes and planning that we require companies to set up. Over and above that, they needed to look at the impact of COVID-19 to their stress testing, particularly on liquidity and capital requirements. Because with this particular pandemic, there were some issues that would affect ideally the financial soundness. So we had to look at ensuring that we balance all that. Now, we've also engaged the industry at that level, whereby currently we are picking views, and that is basically channeled through the office, and the team that ideally is within the office basically picks some of these particular proposals, and we are going to see how then we can continually support the industry. We can continually move ahead of the game in terms of ensuring that no one is impacted negatively. So one thing that we've identified as an authority is consultation is really, really important. It's not an end towards what we are trying to provide clarity on and some guidances on, and we'll continually ensure that we create an ecosystem that will be able to withstand this particular pandemic. Thank you, Jeremy.
Thank you, Elias. So PK, coming back to you, we're speaking now about the importance of behavior and changing behavior. I mentioned both for consumers and staff, but if particularly looking at consumers, I mentioned earlier around how saliency and availability bias does potentially create opportunities for insurers. And in this time of crisis, insurance is presumably quite front of mind for many affected people across the continent. So how is Hollard approaching this, and what do you see as the major opportunities? And allied to that, given the challenges with in-person sales, how are you thinking about an approaching digitization of sales, claims, and the rest of the insurance value chain to be able to take advantage of this opportunity that exists to build trust whilst people are actually thinking about insurance?
Yeah. Thanks, Jeremy. So I think what COVID-19 has really clarified for many people, as you said, is the need to have a safety net, right, in the event of a major risk event. So while some customers, maybe for example in the tourism sector, where that sector is probably going to take a while to recover, may want to reduce their covers, what we have found is that there are lots of other customers who have reached out to us to buy new policies, whether they're life policies or others, because they're much more acutely aware of the uncertainty and the risks that they face. I think there's a huge opportunity to engage customers across the value chain digitally. What COVID-19 has done is force customers to actually engage with us remotely with whatever digital channels that we have. And I think we'll go a long way to help and address some of the fears and trust issues that they may have had in the past, right? So what we believe is that some of the reasons where people are, or that cause people to not be comfortable with digital channels is the trust element to it, because they really trust face-to-face communication rather than a digital one, right? And I think this process of being forced to interact, I think, is one way of of addressing that trust over the next while. I think what we're also seeing that some of the early customer insights that industry bodies are gathering is showing that there's a marked decrease in overall consumer trust issues related to dealing digitally. So I'm hoping that that also helps us in the long run. So some of the big opportunities that we have seen, one is obviously remote selling, as we talked about before. I think this face-to-face model has been around for ages, and I think it really is in need of some overhauling in terms of giving customers other opportunities to engage with us on, right? So we talked about call center-based sales before. That's, I think, particularly as we think about the rest of Africa, I think we need regulators like Elias to really help us in terms of enabling digital signatures, right? So in a lot of our countries, that's not an option. And as a result, call center-based sales, while they can be made in a call center, have to still be fulfilled physically in the field, which then doesn't make sense. I think end-to-end digital sales on a cell phone, I think is another thing which we really must push aggressively. And I think we've got people on the continent who have proved that before. So our technology partner, Econet in Zimbabwe, along with their technology arm, Cassava, does that extensively on the life and on the non-life side in Zimbabwe. And that came out of different needs in the market, which precipitated that situation. But I think it enabled discussions between them and the regulator to say, you're going to have to, if you want to ensure an increased take-up and increased penetration of insurance, particularly in the mass market, then you may need to relax some of the regulations that you have in terms of things like electronic signature. So I think there is a huge opportunity there, and that's something that we are investing in actively across all our territories in the rest of the continent. I think the other area is in terms of underwriting and risk assessment, right? So there are definitely companies in Europe who use things like drones and satellites in terms of assessing large commercial and corporate risks, either for the initial assessment, but particularly for ongoing assessments, right? And I think currently we might take on a large corporate or commercial risk and assess it once a year or once in 18 months because the cost of sending someone to a remote part of Namibia might be prohibitive. But if we can use drones and satellites, I think you can do much more frequent assessments, and as a result, reduce your risk as an insurer as well. From a policy servicing point of view, I think there is again a significant opportunity to use call centers, to use apps for us to be able to engage with customers where customers don't have smartphones, using things like USSD, again, to help them answer basic questions is definitely something that we need to push much more actively. And then on the claims assessment side, I think there is significant opportunity both on life and non-life for us to do things digitally. I think on the continent, I think we are significantly behind some of the other developing nations, even in Asia, where you send pictures. As soon as you meet with an accident, you send a picture and someone assesses that damage and then will approve your claim on the spot. I think we don't do that here currently, but I think in our South Africa business, we've now got to the point where not only can we accept digital pictures sent through WhatsApp as a proof of your accident, but also we then use artificial intelligence to actually estimate the loss, so that it's only in extreme cases that you get a individual to actually now estimate what that loss is. So you cut down the time, you cut down the interaction from the customer, you enable remote interactions, and you over the long run reduce costs significantly and improve accuracy. I think from marketing point of view and a leads generation point of view, digital has been used quite successfully. I think we can continue to enhance that. And then I think the other area is fraud detection. I think where you have fraud, I think sending investigators out to physically do inspections again, not required to that degree. You can again use artificial intelligence to really narrow down where you need to do physical inspections or to get much more involved and significantly reduce the number of overall inspections that are sitting on your plate. So I think there are opportunities across the value chain. We have made some strides across quite a few, but I think this view that a physical face-to-face interaction is required has been debunked by some of our partners and colleagues across the continent. And I think we really need to take those examples and use those to really make a leap forward on the rest of the continent.
Thanks, PK. I mean, what's really interesting about this crisis is it's really a trigger event that triggers a new type of behavior. And if it makes sense to people, you're expecting, it's likely that that behavior will continue even after that trigger event. And I think from what you've said, there's a really compelling case for many parts of the value chain, you know, along the lines of in the underwriting and risk assessment and the claims assessment. On the sales side, you know, we've tried digital sales for quite a few years. Do you actually see that being a sustained change in terms of actually shifting people's perspective to buying products without that in-person interaction?
Yeah. So Jeremy, I think it depends on which kinds of products you're talking about, right? So if I take things like motor policies, I think we know that people do buy those online. It's a case of how we push more and more people to that channel and create awareness and take out the complexity of that, right? So if it's a very user-friendly interaction where someone can use sliders and tick boxes to decide what kind of cover they want, I think we can definitely make that much more user-friendly, and that's been done quite successfully in countries like the US. So I think I'm less worried about that. I think in terms of corporate and commercial, those are relatively complicated risks. I think there is, for the foreseeable future, going to be a broker interaction, and I think the brokers add significant value in that in that part of the value chain. But that doesn't need to necessarily be a face-to-face interaction. That can be a virtual interaction between broker and customer, and then insurer and broker. So it's not digital as in a customer physically making the choices digitally, but it can be a virtual interaction, right? The other big area where there's been a mind block in terms of this is the mass market, right? And I think here is where we really have to take lessons from what's been done in Zimbabwe, what has been done in Ghana, what has been done in Kenya, to really see how we can push the envelope in this space. If in Kenya, again, due to different trigger events and different market events, the whole or a large part of the cash industry or the use of cash has been able to be moved to mobile money over a period of, I don't know, 5 to 10 years. I can't understand why we would have a challenge in moving people to buy a funeral insurance product, for example, on a cell phone. In Zimbabwe, Econet and Cassava have proved that they've been able to sell 3 million policies, I think almost 3 million policies to date, using a completely digital interaction. Obviously, that doesn't happen overnight. There's a lot of consumer education that's involved. There's a lot of hand-holding that's involved. And there's a lot of investment in the technology that is required to make that a very easy, user-friendly interaction. So in Lesotho, for example, in partnership with Econet there, we've now launched a similar product, and we're seeing very good take-up of that funeral product, which is a completely end-to-end digital interaction. So we plan to partner with them across the continent and roll out some of these things. So there will be challenges. It's not going to be a cakewalk, but I definitely think it's doable.
Yeah, thanks. I mean, that's really interesting. I think it's also interesting that you highlight the example of Zimbabwe and Lesotho, where I think there's a much higher established kind of demand for insurance products, particularly funeral insurance products, where it's, whereas in many other markets on the continent, it's not quite as established, and there's probably a lack of trust in the insurance industry, which does make it a little bit more difficult in making that first sale, as opposed to more established markets. But with that, I want to move on to Craig. And Craig, maybe looking a little bit further into the future, I think you spoke earlier about distinguishing between the short-term response impacts versus the longer-term impacts and potentially on the recovery as well. What do you see as being the major impacts on insurers and the insurance industry from COVID-19? Have you seen a role for underwriters already changing? But particularly, I mean, looking in the next 3 to 5 years, what do you see as being some of the major changes to insurance industries across the developing world?
Well, yeah, I mean, right now we've seen some changes in different markets, perhaps that are a little bit further along in the COVID experience than the markets in Africa. So, we could expect this perhaps to follow a little bit in Africa, but maybe to some extent they're already starting. And these are things that sort of reflect some interesting kind of competitive responses that insurers are making to try and sort of like get ahead of their competition. So one of them, for example, is the impact that we're seeing at the moment of the lockdown and what that has on motor insurance risk. And you're seeing that some insurers are actually giving customers some sort of credits against their next premium payment or some other kind of refunds because the risk is actually lower. Now, in most markets, of course, motor insurance is a very significant part of the portfolio, and it's not always one that performs that well, and there's a tremendous amount of competition there. So whether we see this sort of very proactively like that, or whether we see it as sort of the renewal phase comes through, I think things like some applications of telematics and on-demand insurance and such will be real opportunities for some insurers to try and get ahead of that competition curve in what is a pretty significant class of business. Another one that we've seen is some insurers have actually said, well, look, this whole pandemic exclusion idea isn't working. It creates problems in how we treat our customers. It's a reputational risk problem. And while some insurers might say, well, look, that's the way the policy is, we have to stick with that. Others are saying, well, maybe we can think about that differently. What happens if we don't enforce that exclusion, either currently or going forward? How could that perhaps give us a very positive boost in terms of reputation in the marketplace? So there's a couple of ones that I think are sort of coming through in the shorter term. And then in the longer term, that similarly, there's the question of how insurance might play a role in supporting the delivery of some of these services. I mean, becoming more proactive in the delivery of on-demand health, for example, rather than say, well, look, we'll just cover it after the first 4 or 5 days of something. Let's get involved in the first part and perhaps work with governments to provide that, so they become a channel for delivery much more. I think there's a big opportunity there. And on the pandemic exclusion side, we did see after the terrorism events that things like terrorism risk pools started to become an important way to help the industry to provide that kind of cover. And we think that pandemic risk pools might be part of the solution in the longer term as well, so that insurers can then provide more innovative products in more innovative ways.
So let's stick with that topic, Craig, on innovation. I think traditionally a period like a massive crisis like we see now has lots of creative destruction, to coin an economic term, and we do see it. As much as there is a lot of destruction of value, there is a lot of opportunities for new innovation and innovators to enter the market. So what would you say would be the major imperatives for regulators or supervisors to consider in enabling innovation in their markets, both in the short term and the medium to long term? And are there any particular opportunities that you see for the insurance sector beyond what we've already discussed? So, I mean, for example, I've heard the odd discussion around parametric insurance models specifically for pandemics. Do you think that type of product is appropriate or even responsible? It kind of feels a little bit like taking advantage of the current crisis, but are there other things that we can learn about the way in which products are designed, and what kind of innovation can be enabled in markets in response to this crisis?
Yeah, I think the sort of the index-based pandemic issue, what we have seen is that kind of risk sharing through pandemic bonds it's really a sort of a pool option, or a large insurers going to the market, the reinsurers. And interestingly, the World Bank had one of these on issue, which triggered as well. So I think there is coverage there, but I think it's more important for people to, in that sort of the retail space, to be able to get what we sort of think about in terms of like micro-insurance, where the issue is getting health protection that doesn't have an exclusion. And the same sort of thing could apply with the business interruption that we're seeing at the moment. There's a lot of scope for small business coverage, but providing it without a pandemic type exclusion is going to be difficult for insurers unless they can work with each other and with governments to have some kind of pooling arrangement and access to risk transfer. But I know that there has been some recent sort of standalone micro type individual insurance on pandemics, but I would think in the longer term, it's better to be thinking more proactively about what customers actually need and how that can be provided.
Okay, great. And Elias, coming to you then, how do you see the role of regulators in enabling innovation? What are you at the IRA currently doing, for example?
Right. So essentially, what this particular period provides to all regulators is an opportunity to look at how then we can provide a platform that will encourage innovations, and particularly our strategic focus, which is basically embedded within our policy and market development. We are looking into promoting innovation, regulatory sandboxes, and insurtechs. And what we started 1 year ago, we initiated a process of developing our innovation hub that was supposed to work as a platform that will encourage collaboration between insurtech innovators to drive innovation, develop new products with a clear potential to advance the objective of inclusive insurance. So this was to give us an opportunity to see how then we can improve accessibility, how can we improve efficiency and quality of insurance products that were coming through. So the biggest challenge that we faced over the last couple of months after COVID was then how then do we continually enhance our process of encouraging and harnessing innovation within the sector. So we realized that we also needed to make a shift in terms of this particular process. So we've decided that we are going to communicate. We are going to provide a platform that will still enable us meet this particular objective. So at the moment, we've come up with a committee that will look into accessing and inviting these particular applications that will be submitted electronically. And we are going to ideally look into those applications, then provide them to test those applications or their products or their service within a year. We've also come up with a section that will create what we call a virtual environment for people who are very enthusiastic about insurance, about how we can change insurance. So within this particular community, we are going to come up with views that will see us focusing highly on what we really need to do as an industry in towards pushing these particular services to the market. So we are looking into ensuring that this particular process works. We thought that we could have done it, but with this particular COVID, we've decided to go virtually. We've set up a website that we are going to launch soon, whereby all these applications are going to come through. We've set up the first, what we call a virtual community, whereby people that will be interested to discuss issues around insurance innovation, growing insurance innovations, they are going to come in that particular community, come up with views on what we are going or what we need to do. Further, again, you've noticed that we've managed to have our microinsurance regulations out. These will operate as a greatest springboard towards ensuring that innovators, particularly insurance companies or insurtechs that have had a very good experience in terms of testing the new innovations, they can ideally get into that particular sector and see how then they can push towards ensuring that our customers get the product that they need, and they are going to cover some of the risks that some of the incumbent companies have not been able or keen to take up. Also, we are exploring the cell captives, and ideally, in terms of what we are looking into the cell captives, is whereby how then do we translate the chamas, the social insurance piece, and ideally formalize those particular component into an insurable or basically an insurance entity that will be keen in terms of supporting these particular communities that are been working around the social kind of insurance framework. So there are a couple of things that we've done. We've started by setting out our innovation hub. Within that, we are looking into pushing the microinsurance regulation, calling in application and setting up microinsurers, but also we are keen to bring in the cell captives, but on the component of basically translating the chamas into a sustainable insurance model that can easily be transited to a microinsurance company. Then thereafter, it can become an insurance company. So basically setting up the stage in terms of harnessing and bringing all these particular concepts that we've been seeing in the past and modeling that into something that will be able to create some leverage within the insurance sector.
Okay,
right.
thank you.
Jeremy?
Really interesting. So building a much broader set of possible entryways into the market, essentially, for different innovators. What about the question that, or the point that PK raised earlier regarding more broadly allowing digital or electronic contracting and digital KYC? Is that something that's already permitted in the Kenyan market, or is it something that you would consider, particularly in this period of social distancing?
Right, very interesting. And you've seen that when it comes to insurance, we are very keen to getting everything signed and basically having some piece of documentation towards the support that you have on insurance coverage. Now, interestingly, we had an amendment that was made within electronic authentication and signing of documents. Now, ideally, what basically happens in that particular concept is that we needed to see how then these particular amendment will get into the insurance perspective. One of the most interesting things is that we made an amendment in the insurance law in 2019, whereby we are allowing electronic policy documents. We are allowing companies to offer some of these documents electronically, either through email, either through a platform. And ideally, what needs to happen is that the companies should also have a way of ensuring that they're looking into consumer protection aspects. Now, with that electronic signatures and all that, there was need for a law, and we got a data protection bill just approved a few months ago. That essentially set up the stage that enable us to now have an ecosystem that will allow digital consumption of insurance services. At the same time, we are looking into protecting the information that is being shared across different platforms. Now, we've seen products that we've allowed in the past that do not require what we call physical documents. We've seen products that are basically sold through mobile phones. And as long as someone has gone through the terms and conditions within that particular application, then that means that he has basically signed up for the product. Now, what we are basically keen of within our product approval process is how then customers will be made aware. In case there is a grievance, how will this particular grievance be met? And what are the obligations of each and every company towards providing this particular product without basically engaging physical documents, or where they just use a platform to acquire those particular products. So what we've seen is that with that particular law being passed, and us changing our Insurance Act and allowing for electronic policy documents, electronic emailing, and all that of these particular documents, it gives us a platform whereby we can now envision and go at a stage whereby we can go to the mass markets, whereby if you basically go to maybe a big, if you want to do microinsurance, you have to produce a policy document for each and every person. It won't be something that will be cost effective. So we are looking into ways of ensuring that we are channeling all that and ensuring that electronic forms are allowed within the insurance law. Now, something very interesting, given that currently we are facing some of these particular challenges, we know that digital revolution that we are seeing at the moment will bring in new risks and also might change the old risks that we are facing in the past will face new twists. Now, it basically kinds of challenges a number of regulators, and what we've done is to see how can we adapt and adopt some of these new strategies. And that's why we mentioned the two interesting strategies of Innovation Hub, allowing us to discuss with the innovators within a community what they really would like to see, and keeping that within the market to keep our markets and customers safe. That is our core aim, is that even if we are allowing all these innovations to come in place, how then do we keep our market safe? How do we keep our customers safe? How do we certainly ensure that companies that have or are looking into advancing the underwriting claims and these particular processes remain stronger in that particular position? Because without enabling that, then we won't be able to achieve our intended purpose as a regulatory body. Jeremy?
Okay. Great, thank you, Les. So just before we wrap up with final statements from everyone, I just want to take one more question from the audience, which is from Rishi Raitata. So PK, the question is around the fact that you mentioned Zimbabwe having a culture and a high rate of mobile money usage. What is the feasibility of digital sales in markets without that kind of experience with mobile money?
So I think that's a really good question. I think it definitely is more challenging because you've got to create the awareness from scratch. So I think the setup time or the lead up to people being comfortable with digital-based sales is going to be significantly longer. But I think given that the use of phones, the use of smartphones is rapidly increasing on the continent, I think there's significant opportunity to work closely with MNOs in these markets to be able to change that behavior. And I think, yes, I think whether you have rapid use of or extensive use of mobile money or not, I think there is an opportunity to do that. That the time to get to your end goal is probably going to be different or longer.
Okay, thank you. Great. So let's end with a last concluding remark from everyone, and let's start with you, PK, whilst you have the floor. So what do you think will be the greatest impact of the COVID-19 crisis on the insurance sector in Sub-Saharan Africa? So kind of just one thought from each of you. What do you think will be the greatest impact of this crisis?
I think from my side, thanks, Jeremy. I think from my side, the greatest impact is going to be in terms of how people, consumers in particular, think about virtual communication, right? And I think virtually interacting with the insurers. And I'm not saying that just because the topic of this interaction is that, but I just think that we are going to break a lot of barriers in terms of the trust issues that people have with virtual and remote communication. And that's going to go a long way to helping us educate customers and make them much more comfortable to deal with us remotely across the value chain.
Right. Craig?
Yeah, yes, Jeremy, I think, I mean, I would perhaps add to that. I mean, I fully agree, but just in terms of an addition that might be perhaps a sort of perspective for the audience, is that I think one of the things we're seeing is there's a sort of a short-term fire to be dealt with and then longer-term change. And I think the real risk for many insurers is that they'll be kind of caught up a bit too much in dealing with the fire and accidentally assume that things will go back to the way they were, rather than starting to really plan for emerging out of the sort of the short-term crisis into a long-term world that will be different. And so we're going to see some winners and losers out of this in the long term. I think we will see a different insurance marketplace, both from the point of view of the customers, but also from the point of view of the insurers and suppliers.
Great. And Elias?
Yeah, I think for us, we just need to adapt to COVID-19. And essentially, from the regulatory point of view, innovation and policy shifts will be some of the things that we have to be keen on going forward. We have to ideally look at ways in which we should allow companies to innovate quite quickly to address some of the challenges that might happen in the future. And that also requires us to look at how then the policy issues can quickly be adopted within those particular changes. So what we are going to see is that a lot of innovation and a lot of policy shifts that is going to happen in the next frontier.
Great. In that case, thank you so much to Elias, Craig, and PK for your fantastic contributions and for a great discussion. And I hope that it was useful to the audience. I'll hand over to Sarah now. Thank you.
Thank you so much, Jeremy, and thank you to Elias, Craig, and Pravin. I really enjoyed the session. I learned a lot. It was very relevant given our Giza burst today, and we've been on the phone to our insurance provider trying to figure out how we can claim at this time. So from a personal perspective, it was very interesting, but I really thank you for taking the time to share with us your thoughts on this issue, and thank you very much to the attendees who joined us. So I'll be circulating the recording to everyone tomorrow, and I look forward to seeing you all again, hopefully on future webinars. Thank you, everybody. Bye-bye.
Thank you very much.